Okay, members, good morning. September 4th. What happened last week? Another week of up. What else? Market just keeps grinding. Got 0.5% pretty much across the board. Russell is the leader this year. Small caps were to be 10% higher. 6, 5, these are not small numbers. The market has done, as well or better than one could expect, and one has to respect that a market that wants to go up just is a market that you want to be long with. Let's look at the details here. Technically, there's nothing wrong with the market that refuses to pull back, except the fact that you might not be able to buy it. When you have a market that just continues to hang, the ability, to get into that market, right, to participate is hard. And, if we look at the current market, right, where we had that drop back in June off Brexit, and if we go back farther, we had the big drop to start the year, right? We had a big push up after the Brexit, and then ever since then, it's just been a range trade. And it's been range trading now for, 2.5 months. And in this, well, it's not 2.5, but it's, 8 weeks, about 8 weeks. That range, it's hard to buy, it's so tight. We're talking about 1.5%, 2%, a couple percent actually. It's hard to, to justify buying the bottom of the range. You think it's finally going to break down, blah, 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 right? Nobody ever gets in. And then before you know it, this thing takes off again. And why is that? Well, because what it's doing is it's consolidating its gains over this period of time. If we go to the weekly chart, right, we've had a huge move to the top side. And that top side move, as it continues here, first we had the February lows, big move, consolidation, right? Now, big move off of Brexit, again, off of a false breakdown. Now we have consolidation going on. The consolidation back here, much wider range, but it went on for about 3.5, 4 months. Right now, we're 2 months into this one, tighter range. When this one breaks, a lot of times what happens is you get some sort of a false move down that then leads to a reaction back the other way. So, I don't know if we're going to get that false move. Sometimes it just consolidates and then takes off. But if we get it, we have to look at it as a buying opportunity. Where should it come back to? If it does, the bullish retest regen is the ideal spot. I've been talking about that 35 to about 20 range for a while. If it comes back in there, we're more than 6 bars at this point, right? This thing has gone across now more than 6 bars. When it does that, after breaking out without a retest, probability is extremely high it's going to get bought if it comes back. And so, if there's one thing that we should be focused on, and that is that when and if this thing comes back, we should be prepared to try and buy that top third of that bar. So somewhere in that 2020, 2015 maybe, the top of this bar is about, 21.15 almost. Anywhere in that area should be the ideal place to buy it on a retrace if it happens. And that's not too far down. I mean, it could certainly happen. But I suspect, just like we saw back here where we get the breakdown, it ends up being the false move that leads to the next move up. I suspect this will be the same story. So we can't make these things happen. But what we can do is recognize what potentially could take place and be prepared to do something about it. So if we look at all these charts, whether I'm looking at the S&P or if I look at the NASDAQ, right, they're all in this range-bound kind of consolidation across, and longer term, they've got their breakouts and they're trying to hold them. It's a little different here, right? The breakout on the NASDAQ. At the top up there was 52.31. That was this break. It's already doing the bullish retest regens on the longer term time frame here. If we look at the NDX, right, range consolidation up here, again, gets over the highs, gets the breakout. This one so far is held without a retest regen. And then if we look at the Russell, right, the Russell now, of course, was much weaker. But the Russell just keeps working higher. I mean, this one is not really, all the others you could just draw a range here and say there was a range. Well, the Russell isn't. The Russell keeps stepping up over and over, making new highs. And so the consolidation here has a bullish bias to it, and it continues, and it just did continues to push to the upside. And what is it doing? Well, it's trying to play catch up with what everybody else has already done, and that is that, it got over its high here, it's continued on, it's got over this high now, right? And it has the ultimate high over here it's trying to get to. I suspect, potentially, and I'll bring the monthly chart over, when the Russell finally tops out at that top, that 1296 area, and we're only at 1251, that would probably be an area that we could expect this thing to try and retrace, and maybe the Russell's the one that's going to signal the retrace when it takes place. But that's still 40 points away. That's still another 3% or so. And on all of these, and let's go back to the S&P on the weekly. We still have those large ABCD structures in effect that are playing out on the weekly charts. On a weekly basis, right, we have those large ABCD structures that are in place. The A point to the B point, back down to a C, and then the breakout was here, and that projects quite a bit higher still, and that is in motion. And so all of those are taking place, at the same time. All of it very bullish. And so I can't speak bearishly about this market. The market continues to look very strong. If we're going to get a larger retrace, we're going to want to buy that retrace. There's no reason not to. We should expect that. We're not going to fear or should not fear something coming back, and we need to have some cash and deploy it if, in fact, that's what we get. How do we keep staying up here? Well, the money keeps rotating. I pointed this out 2 or 3 weeks ago. The money was rotating, the financials and the technology, still doing the same thing. That's what's helping to hold it up. And I suspect that's going to continue because we have, the thing that's driving the XLF is the higher rates. The technology is driving itself. These larger themes that we've harped on, they continue to play out, and they're opportunities, and we have to see them as opportunities. For the dollar, for example, a strong dollar is going to give us a correction in the precious metals. I took advantage of that, and you saw me do that in the portfolio. We sold some of the GLD up higher. We bought it back lower. We invested in the GDX, on a one-day trade, caught a bottom, got a nice bump. If you stayed in an extra day, you even made more money, but it wasn't worth the risk in my portfolio. All these things give us opportunities, right? And we should take those opportunities. We don't fear them. We take advantage of them. This strong dollar is going to hurt China and has hurt China. It's going to help Japan and Europe. If you want to play in those spaces, use the strong dollar as a way to do that. The other thing I would point out here is that another thing that we should expect to still happen is these MTTFs should reset on the short-term time frame. And so if we pull up the S&P again on the short-term time frame, right, we have these swing point lows, and these resets now can take place without any real damage. So if we get under this and stay under it, we just close down here somewhere, we could still be in the big range, right? That could still be taking place, and we get the reset. That's the most bullish scenario. Also note, even if this thing legs higher right after that, or if this legs higher after that, let's say that we get a reset, then you've got swing point highs because it's a range. You got swing point highs located along the top up here, and that will give you the impetus, right, to get some sort of a faster move to the upside if, in fact, it takes place. So, the scenarios are setting up. Yes, there's the potential here for a faster move to the downside. If you don't stop at this one and you break these as well, then we might get that reset that I'm talking about, the larger one. But it's probably going to be the false move that leads to the larger move. So it's two ways I'm seeing this happen. You get the reset and then you just take off, or maybe you get the false move down off of some news event or something, right? And then that itself gets bought. Either case, either scenario, we have to be prepared to try and take advantage of it when and if it comes. Let's see what else we got here. If we look at the rest of the notes, let me see, the MTTFs. The summer's going to end. We're probably going to see the volumes pick up. It probably takes another week or so. On the fundamental side, All right, so technically very strong. Fundamentally, we got a lot of stuff happening starting this weekend with the G20 summit. But then, then we start getting into all the central bankers, one a week, every week. So you got the ECB first, you got the Bank of England next, then you got Japan and ourselves. And then finally, at the end of the month, you got OPEC. All of these things can move currencies, in particular these, right? These can move the currencies, whereas this one's going to move oil and potentially things related to it. Those moves, when they take place, right, if they strengthen the dollar or weaken the dollar or whatever, that's going to move the equity markets, the precious metals markets, so forth. So expect that the fundamentals are going to be the known events, right, that can drive action in these markets in the coming weeks. Bottom line, what do I think? Well, it's not much different than it has been, and that is I still think that we're going to see these MTTFs reset here somewhere in the next few days or weeks. And at this point, it looks like it's going to happen without a lot of damage. What's the best case scenario? Same as it was on the worst case scenario. I think this is an opportunity if it happens, the 2120, 2115 area. What do I think is going to probably happen? Is going to be another range-bound slow week coming off of Labor Day. We're going to get that the big news Thursday with the ECB. We'll see if that moves the markets. If not, we get Bank of England next. I suspect Bank of England is not going to be a big deal because it doesn't look like they need to do anything. But then, the ECB is the big one this week, and then you have BOJ, which is a mess, and then ourselves and whether or not we're going to raise rates. And so I think those things are going to drive things in the coming weeks, but probably tight consolidation potentially for another week. I don't have a strong bias up or down. If we look at the shorter-term trade, this BABA trade that I've highlighted before and that we have in the portfolio is really something you should take a look at. I've been doing videos on it, and there'll be another one today, not the TNT room, but my room. There'll be another one on it today, but what you might want to do is come over and watch those videos. I'm not going to spend a lot of time here talking about it. If I pop down here, here's the trades, here's the videos. BABA, the last one was 828. I'll do another update today. This trade, if you're not in it, you should take a look at it because the movement here is idea, and it looks like there's another 15-20% still left in this trade. And if I pop over to the chart, you can see you just got the breakout here, just got over it on Friday. Now, we may get the immediate retest regen. What's it going to be? Well, it's the width of that bar. If it comes back within 6 bars, which I think is a good chance that it will, it can get to the bottom of this, the bottom third. And so I think that's where we should be looking at, probably trying to buy some more. So somewhere in the high 97s, 98 would be the ideal spot. But this thing, we got in, I believe it was on this bars where I started buying it. And we had the nice big spike up. Now we had the consolidation, now the attempt to break it out again. That's idea. And if you go to the weekly on this thing, right, you can see the potential leg up. And finally, if I go to the monthly on it, let me see, do I have the monthly sitting here? Yeah, there's the monthly. It's coming into this bar. The bottom of that bar is 99.05. That's where we traded to last Friday. If it stays into this bar and starts inching up, right, then the top of the bar becomes the target. That's 120. And I wouldn't be surprised to see it overshoot that as well. Ideal trade setup all started with multiple swing point breakouts on multiple time frames, which I've told you many times has great potential. As far as what else to expect, on a longer-term basis, I've been focusing on disruptive technology. I've been thinking a lot about it. I've been doing some research over the last couple of weeks when I have time. And one of the things I'm looking at is 3D printing again. Now, if you think about the way these technologies work, usually what happens, and I'm going to pull up the 3D chart because it kind of shows it in terms of how the charts trade. And I've pulled it up here on a long-term time frame. What usually happens in any kind of new industry, right, is you get the initial, oh, it's going to solve all the problems in the world, right? And you have that huge buildup in volume and so forth. And then eventually hit some top. Now, in this case, that top was, is a decent volume top. But then you came off with volume, right? And that's always a bad thing, usually, right? So you get to push down, back up. That's the test. Fails, and then all hell breaks loose. And what's happening at the same time in terms of the industry is you're looking at this industry and you're saying, okay, it's going to solve the world's problem. And then what happens? Reality sets in. It's not, right? Because it was a fad to begin with. But then over time, what eventually happens, if it's really going to be a disruptive technology, is that this thing is going to find a bottom, and it's going to start seeing volume come back into it, right? First jot up, push back, and then if it breaks over this area, right, then you're back to the races again. And so I'm looking at this 3D systems in terms of a potential play longer term, because they're kind of a leader in terms of their technologies. If you look at what they're actually doing now, I mean, they even have a 3D printer now. 3D is advanced. When it first came out, it was all plastics, right? Printing plastics. Okay, it's cool. It's a fad. Now they're actually printing other things. For example, 3D Systems now has a computer, not a computer, but a printer out that prints chocolates. So you can take it to all these bakeries, and you can have a $10, $12 an hour wage earner, sit there and feed this machine and print all these chocolates that you sell to your customers. You don't even need the baker. That's where it's come to, and we're talking about just chocolates, but just go on. It has all kinds, and the reason for it is you can push different basic materials into these 3D printers now, and so you can print skeletons. You can print all kinds of things, and they have all of these technologies. 3D printing systems, interesting company. I'm really focused on this one right now and thinking about wanting to take a position in it. And then I'll flip to the other side of it, and that is so this is like a young gun, right? They can double, triple, quadruple, even more, tenfold kind of increase. And then you go over to the other side of things, which is like Autodesk, which we know is a big CAD firm. They actually are creating the infrastructure for these 3D printing companies to use. Big bump on earnings. I believe this was earnings just recently. If you look at this chart, there's your weekly breakout. There's your monthly breakout. Breaks out on all time frames. Folks, do you want to buy the one that has the potential, or do you want to buy the one that's already realizing it? Well, if anything, you want to buy both of them. But this industry, this particular company, well situated to take advantage of what's taking place. These are kind of the picks and shovels guys that are providing the infrastructure. I like both of these companies. I like the way they're both setting up. Let's keep these on our radar in terms of a disruptive technology that we should be looking at longer term. Okay, that's it for this week. Thanks for joining me as always. If I can help you out, give me a holler. Take care, and I'll see you next time.